it's an incredible business. I mean, just if you look at Baba and Tencent and kind of where they're at, and the ecosystem and the moat and what they control, and all of that. And look at the tailwinds from China. I mean, there's a lot to me to like, even more than the large US tech, just because I think that the tailwinds are so much stronger, and there's some serious barriers to entry.
Hey guys, welcome back to the channel. Today we're going to be discussing Alibaba, okay? I'm sure you're all very familiar with Alibaba, as every man and his dog is making videos about Alibaba at the moment. But in today's video, we're going to be looking at two famous investors out of the US to hear their thoughts on what they think about investing into Alibaba and China as a whole. And that's been Mohnish Pabrai, and recently Phil Town has come out with a video where he discussed his thoughts around investing in China, and he touched on investing in Alibaba as well. So we'll look at both these famous investors. I look up to both these investors. I've learned a lot from both these investors. They've written a number of fantastic books. I'll leave a link in the description below if you wanted to check those books out. Talked about them a few times on the channel before. So that's what we're going to be looking at, to hear what these amazing investors out of the US, to hear their thoughts and on investing into Alibaba. They're a lot smarter than me, so definitely take a bit of stock in what they have to say. I think there's some key learnings that we can take from both these investors. So with that said, let's jump in to hear what Mohnish Pabrai has to say about Alibaba.
I think here there is obviously going to be much larger revenues and profits and such in the future with all the different things they have going on. But you're starting from a very large base, right? So 600 billion plus market cap. It's very cheap. I think Baba is one of the cheapest plays out there. Alibaba is a crown jewel for China, just like Tencent is a crown jewel for them. So I don't think they will want to do things. These are the plays that have the possibility of global footprints, that they can get there. So I don't think the government is going to take an approach which is going to kill the golden goose, if you will. So my take is they've extracted their pound of flesh, and they've sent a pretty clear message who's in charge, and such. So I don't really expect much more than what we've seen already. In the long term, I think a lot of the value creation for them is cloud, which is non-existent from an earnings perspective today. They have some scale, but they're the number one player. But I think that when you look at Amazon's numbers, and Amazon's numbers with cloud are somewhat misleading, because they dump their internal cloud expense in there. So actually, 50 billion revenue and 15 billion net income is actually understated. So I think they're making more than 15 on that, because they're growing as well. They're investing in all the future growth. So the cloud margins are incredible. And the issue with the cloud is that very few people can play. I mean, in the US, the game is for the most part over. You've got the players, and they will. It's hard to even see them even changing the position they're in. The DNA of Alibaba and Tencent is what is unusual. I think Alibaba and Tencent have very unusual cultures and DNA. Chinese were copycats, and now the US is behind. And I think companies like Facebook, they have their marching orders. I mean, they're pretty much looking at China and trying to clone what they have there. So it's actually flipped. It's flipped the other way. So what used to be that the Chinese were just looking at what was there in the US and mirroring it, then they've innovated beyond that. And now what they have, the payment systems in China are way more advanced than here. All the common, because they leapfrogged, right? So just like in India, they leapfrogged landlines. They went straight from no phones to mobile to smartphones. The Chinese have gone from no retail to straight e-commerce, right? They skipped the malls. They skipped the retail. So there's a lot of skipping that's happened in China because of the way the growth and development of the country has taken place. And so that movement, and a lot of these apps, the Chinese apps have no US equivalent. We don't have
Well, I think what you were saying was that's exactly what Facebook's trying to recreate now. And they're in China, you have these super apps. In the US, you have kind of like wannabe super apps, but
yeah.
there's so much more regulatory red tape to, like, you saw what happened with Facebook and their digital wallet launch last year, like, got completely botched by the government. They're trying to restart that with DM, but
but what I'm
China,
saying,
it would have just happened.
What I'm saying is that the US has a lead on cloud.
Yeah,
we're ahead on cloud for now, and but on most of the other stuff, China's ahead. It's technologically ahead, and even the consumer behavior is ahead. And so US tech is very smart to try to clone as much as possible of that, to the extent that they can. They've got their hands tied behind the back on many fronts, just because what would be legal in China would not be legal here.
Mm-hmm.
Yeah, so, but I think the large Chinese tech, because of the tailwinds, because of the size of the market, because of future GDP growth, all these other things that are going on, and quite frankly, the modesty of the valuations, is a great place to be.
What is Baba trading at right now on a PE basis?
20.
20, yeah.
20, but the thing is that 20 has a lot embedded in it. They have a lot of money losing businesses that are within that 20. So actually the real multiple is much lower. Yeah. And we don't know, the thing is, some of this is a black box. We just don't know a lot of stuff that's inside, but there's a lot of good stuff inside. And there's a lot.
So when you think about the Chinese names from a corporate governance standpoint, especially Chinese big tech, do you have any concerns at all about leadership at Baba or leadership at Tencent?
So these two companies specifically, I don't think they fit the template of typical Chinese businesses. Both these businesses from the very early days had international backers, and they've got what I would call enlightened leadership. And so if you drill down on the principles of Alibaba, for example, core principles that they live by, they are very transparent. It's a very core corporate mission. I think Jack Ma put in a lot of these principles and vision and mission into the business, and it's very deeply embedded, because they will, for example, when they hire a new engineer, they'll take them offline 4 weeks to make sure they get embedded in the company's culture before they start working.
Interesting.
So and they're doing that for all their employees on a pretty deep basis. So I think that these businesses have learned that they are really global companies, and they need to operate with a global set of rules. So they have been very good partners for their international investors.
So there we have it, guys. Pretty interesting insights and thoughts from Mohnish Pabrai. I'm going to leave a link in the description below if you guys want to check out the full video. I highly recommend it. He touches on many different topics in this video through SumZero, but this was some of the key lights just around Alibaba. But the whole video is definitely worth a watch if you're interested as well. Also, Brad, the stock compounder, he does an overview of each of Mohnish Pabrai's videos, which are fantastic as well, just if you wanted more of an overview rather than watching the full video yourself as well. So highly recommend checking that out as well. Next up, we're going to be looking at what Phil Town has to say about investing in China. He doesn't predominantly focus on Baba, but more just investing in China, and sort of gives a bit of a brief history on that. So let's jump in and check out what he has to say about investing in China.
So a lot of investors in the United States have looked at China in recent years, kind of in the hopes of finding the next Tesla or Amazon or Netflix. And one of the reasons for that is because the Chinese market is growing really fast, all of it, right? In America, we're growing maybe at 1.5%, 2%, something like that. China on a bad year is growing at 6%, which means the tide's coming in for all Chinese companies. So there's obviously a really, really strong reason to be looking there for a great company to put money in. So we do it too. I look at China all the time. In fact, I sent one of our analysts over there not long ago to take a look at a couple of companies and get feet on the ground. So you guys know there's a real common phrase, right? This is the Netflix of China. This is the Amazon of China, right? So this is largely due to the idea that the Chinese government has kind of isolated its market from all the rest of the world. So whereas Amazon's all over the world, then Alibaba becomes the major stock of China that's doing the Amazon kinds of things. So there are really kind of interesting companies over there, no question about it. I mean, interesting enough for us to look at it really seriously. But we've basically found there's some serious risk when looking at Chinese companies. I think really the biggest one is that there's just a major lack of transparency and regulation. The Chinese stock market doesn't require the same kind of transparency as is required by Western, and particularly American and Canadian stock markets. Our securities people make sure that you are putting out, if you own running a company, you're putting out all the information that your investors have to have. That is simply not the case in China. And as a result, there's been a number of scandals with Chinese companies that simply cook the books and just make stuff up and then put it out as if it's real. And the problem, and you may not be aware of this, but the problem is that China does not allow United States auditors to come in and audit a Chinese national company. So you don't get to go see what's really going on at Alibaba or what's really going on at JD. You just got to take their word for it. Now, those companies are pretty well known to have not been cooking their books, but others are maybe not so well known, not so well regulated, and several public companies that were listed in the U.S. market have gone into bankruptcy after the CEO did some heinous stuff with the accounting. So if you don't know that numbers are real, then what can you do? I mean, you can't just, I guess you could gamble, but it certainly isn't investing, right? So that's one huge risk is the sort of the accounting that goes on in China. Now, another one is that we are kind of entering a lot of conflict between the United States and China. This is kind of a natural progression that is, it's just common through world affairs for, the last hundreds and hundreds of years. And that as an aging power starts to begin to devalue its currency, as the United States is doing now, as it starts to slow down its growth, as it starts to have conflicts all over the world that drain its bank accounts, then it's possible at that point for a younger, more vibrant, more aggressive country to start coming up and challenging for world power. That, of course, happened in a sort of friendly way between the United States and Great Britain, turn of the 19th century through World War II, when the United States basically then took over Britain's standing in the world. And now it's happening between China and the United States. And what they did was look at Singapore and they said, wow, this is really working down there. Let's do that. And as a result, they opened up the country to capitalism. So fascism is simply a central government that controls everything, but it's capitalistic economic system underneath that. And China decided to experiment with that over the last 40 years and has been extremely successful with it. And they're continuing to be extremely successful with it. So the Chinese have implemented an incredibly effective economic system, bringing out of utter poverty hundreds of millions of people. And if Singapore was a big deal, China is a big deal on massive steroids. And they are going to be the biggest economy in the world, certainly in our lifetime. So this is huge. And they are, as a result, challenging America for leadership in the world as their consumers start to have more money, their middle class starts to grow, and they become more influential in the world. So you have this rising power, this sort of sliding power, and they're facing off against each other. And this is creating a lot of strain in the relationship that is needed to be comfortable in order for us to invest in China. So this is a kind of long way around of telling you another of the risks there is that we end up with something that's a Cold War where China just decides to shut off American investment to Chinese companies. I don't know if that's going to happen. I hope it doesn't. I think there's an awful lot to be gained by continuing to be trading partners with China. But China has started to really flex its muscles, and as Trump was pushing back on the terrible balance of trade we have with China, now the Chinese are pushing back on the Biden administration, saying, screw you, we're just going to keep doing what we're doing, and you're just going to have to tough it out. So we'll have to see this comes out. If it gets into a hot war over something like Taiwan, which China wants to absorb back into China, a part of China that broke out and broke away in 1945, then this could really become a big problem. So I'm not advising you guys here. This is just my opinion. But listen, investing in what you don't understand or what you can't predict easily is just gambling. That's all there is to it. So I'm just going to encourage you, do your due diligence. This is really the way Rule 1 investors can invest with more confidence and less risk. Really dig in. If you're going to invest in China, I would strongly recommend you go there and check out the company. Make sure it is what you think it is. Kick the tires. Don't just go based on what you see on paper. So since most of you probably aren't going to do that, most of you probably shouldn't be investing in China.
All right, guys, so there we have the two different investors sort of share their thoughts on investing in China. I'd love to get to know what sort of camp you guys are in. Are you more sort of leaning towards Mohnish Pabrai, being quite bullish about investing in China, or are you more sort of leaning towards Phil Town's approach there and sort of not really getting involved? As you see, it has been a bit too much risk. Myself, personally, I'm definitely more in Mohnish Pabrai's camp. I think it's definitely worth the risk. I do understand there are risks around it, and it's like any investment you make, there's always risks. But I sort of understand the risk there. I have a basic understanding of the risk, let's say, and I'm happy to take that risk on. So I do have a very small position with Alibaba at the moment. And I have been learning and reading about Alibaba a fair bit over the last couple of months, especially when I realised that Charlie Munger had taken a position in Alibaba. It definitely heightened my interest in Alibaba. So I have been sort of reading up and listening to a fair few different videos and podcasts around Alibaba recently. And I've just finished the book, Alibaba, The House That Jack Ma Built, which is a fantastic book as well, especially if you're wanting to know a bit more about the history and the backstory of Alibaba. I highly recommend it. Gives you a good sort of breakdown of how sort of Alibaba became to be. With that said, guys, I'm going to wrap that one up there for today's video. Remember, if you did enjoy today's video, it would be much appreciated if you hit that like button. Helps me out a ton, helps push these videos out a bit further. And if you'd like to see future videos, make sure you hit that subscribe button. That way you can stay up to date with the latest videos. All right, guys, stay safe out there, and we'll catch you in the next video. Cheers, guys.